Question number 1. A firm's equity is worth 4 million and its debt is worth 2 million. What is the percentage of firm's financing that is debt? A. 20%, B. 67%, C. 33%, D. 40%. The correct answer is 33%. Question number 2. Which one of the following statement is incorrect regarding MACRS depreciation? A. Depreciation is computed for each year by multiplying the by a fixed percentage. B. The expected salvage value and the actual expected economic life are not explicitly considered in calculation of depreciation. C. Every asset is assigned to a particular class which establishes assets' life for tax purposes. D. Annual depreciation remains constant every year even by using different rates. Answer is D. Question number 3. Which of the following equation is correct for calculating the operating cash flows? A. EBIT, depreciation, taxes. B. EBIT plus depreciation, taxes. C. EBIT plus depreciation plus taxes. D. EBIT, depreciation plus taxes. The correct answer is EBIT plus depreciation, taxes. Question number 4. Dividend received on stocks held by an investor is called A. Total profit, B. Income yield, C. Total return, D. Capital yield. The correct answer is total profit. Question number 5. Which one of the following statements is incorrect while changing the firm's capital structure? A. It causes changes in the company's debt. B. It causes important changes in the company's equity. C. It always changes the firm's total value. D. It may not changes the firm's total value. The correct answer is it may not changes the firm's total value. Question number 6. Which of the following is referred as a statistical measure of the variability of a distribution around its mean? A. The expected return. B. Probability distribution. C. The standard deviation. D. Coefficient of variation. The correct answer is the standard deviation. Question number 7. The cost of common equity for a firm is A. The risk-free rate. B. The yield to maturity on the bond. C. The market risk premium. D. The required rate of return on the company's stock. The correct answer is the market risk premium. Question number 8. Suppose market value exceeds book value by 200,000 rupees. What will be the after-tax proceeds if there is a tax rate of 35%? A. 150,000 rupees. B. 105,600 rupees. C. 130,000 rupees. D. 97,500 rupees. The correct answer is 130,000 rupees. Question number 9. For an investment project, the cost of capital relevant to the project depends on which of the following? A. Total risk of the firm's equity. B. Type of security to be issued to finance the project. C. Coupon rate on the firm's existing long-term bonds. D. Risk associated with the project. The correct answer is coupon rate on the firm's existing long-term bonds. Question number 10. Suppose you have just passed your intermediate and now planning to get admission in some college for graduation. You have 3 choices of colleges: A. B, and C. You bought the prospectuses for all these 3 colleges and finally got admission in College B. The cost incurred on the prospectuses of other 2 colleges A and C will be considered as A. Opportunity cost, B. Sunk cost, C. None of the given options, D. Fixed cost. The correct answer is sunk cost. Thank you for watching this video. Please like, share and subscribe. Allah Hafiz.